Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, it's time for our weekly Bitcoin update. We've got a lot to look at today. We've got bearish cases and bullish cases to look at. I'm going to take some time today to show you just how technical Bitcoin can be in terms of technical confluence, which we've been recently witnessing. But before we get into all of that, a quick word about the many benefits of becoming a member of the Green Star Trading Patreon. If you already appreciate the work I'm doing on YouTube and wish to show your support for the channel, then why not join Tier 1 for just £5 a month? You still bag yourself an exclusive video each week that won't be available on YouTube. Or why not consider joining Tier 2 for just £10 a month? You still get the same exclusive video each week, but you also get access to the public Discord. There are multiple channels where you can discuss things to your heart's content on multiple subjects with all other Discord members, including myself. You also get access to the entire back catalogue of my educational videos, including the Elliott Wave series, plus other technical analysis videos, including trading and trading risk management. I also host a live session each week via private link to the YouTube. Then finally, Tier 3 for £15 a month. You get all of the previously mentioned benefits from Tier 1 and Tier 2, but you also get access to my monthly dividend calendar where I list my stock picks for the month and all of the relevant ex-dividend and payment dates. You also get access to my stock rating system, which is an at-a-glance rating out of 30 based on company health, value and overall dividend quality. If you yourself wish to look up a specific ex-dividend date or payment date, tag me on the Discord and I can look it up and get back to you. Also, if there's a stock you're interested in and you want me to use my rating system on the stock that you have chosen, tag me in the Discord and I will get back to you with a score. Thanks for listening, guys, and now back to the video. Okay, welcome back, guys. First thing I want to mention about the Patreon is if you are interested in signing up, please now leave it till the start of the month. There's only a couple of days left in the month, and unfortunately Patreon does not charge on a pro rata basis. So rather than being sensible and charging from the day you sign up to 1 month later, it will charge you the first time you ever join the Patreon and then the first of each month thereafter. So if you sign up at the end of the month, you will get charged twice. Now I promise you, you will get your money's worth. Even if you do get double charged, there's an awful lot of value on the Discord, awful lot of value on the Patreon. But it's just to make you aware of that fact, okay? So let's move on now and have a look at the count and the chart. Right, so the first thing I want to cover today is the amount of confluence in place, technical parameters coming together to provide support or resistance in this area. Now this does not mean we've bottomed and we can't go lower, so let's not run away with the idea that Tom's saying the bottom's in. Okay? Right, so the first thing we're going to do is we're just going to take the count off the chart for a moment. Okay, and we're going to look at this recent low. Now in last week's video I mentioned that this was likely where we were going to stop before we broke down. I put up on the chart these measurements here, the bullish invalidation measurement and the 1-to-1. This is this pivot to here equals 1-to-1, and that's 32910. So that played out. We came to it to the tick and bounced. Now the move off of the low is not ideal. I was very bullish when I first saw the initial move, but it's now morphed into something very ambiguous. Therefore we have to keep an open mind and be prepared to see it move lower as well. So that's the first thing. Now the next thing, of which there are many, I say the next several things. This is an exercise in showing you just how technical Bitcoin is. Okay, because you still get idiots out there who say you can't do technical analysis on crypto. So let's just put them to bed now, shall we? Let's open our Confluence folder and let's weigh it all up. So the first thing we're going to look at is a simple parallel channel. This pivot to this pivot to this pivot to this pivot forms a perfect channel. This measurement is 1-to-1 with this measurement, and we bounce there. So that's the first piece. Channels perfectly. The next thing I would point to is the 1-to-1 that we've just pointed out. However, I would go so far just to show you how predetermined in the mind of the AI out there, the algorithms which are trading this, the bots which are trading this, how important levels are before the pivots even occur. So here's the 61.8% golden ratio from this pivot, this pivot, this pivot. So this one is not in all the price data prior to it. And yet look at the importance of this level. Support, 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 resistance, support, resistance, support, support. This level has been vital the whole time. Even though it's measured from these pivots, it was already important. You see? And it happens to be the golden ratio of these three moves. Now I find that interesting. The 1-to-1 here, now combined with the channel, gives us a perfect completion here. The next thing, the regression trend, the regression channel. A to the tick touch of the edge, combined with the parallel channel, combined with the fib extension, all meet here. That's why we bounced. And we were always going to. Now you and I might not know it before it happens. Alright, we can look at measurements like I did last week and point to somewhere where we might find support, but there are so many confluent factors in play from a technical point of view which have already predetermined that that is going to be a low. Okay? Now it doesn't mean it holds and becomes the bottom, but it was going to be a low. You can see it clearly. Right, so the next thing we've got to look at is, let's bring up our moving averages. Right? At the same time as we get a 1-to-1 relationship, at the same time as we get the parallel channel, at the same time as we get the regression channel, we also get a def cross. Now as I pointed out, the def cross doesn't always signal the bottom, but just as it did here, it often signals a low that is imminent. Okay, if we come back in time a bit and look at some other examples, here's the 60 over the 250 def cross, here's the low. Here's the 60 over the 250 def cross, here's the low. Or here I should say. So here's another confluent factor. Okay, which is taking place at the same time as all these other factors. But we're not done yet. Let's now turn off our confluence folder for the moment, turn off this def cross, and let's put the chart into log, and let's bring up our primary pitchfork, our wave 1 and 2 pitchfork. What else was waiting here for us? The 61.8%, another golden ratio. Okay, and this is based off of the wave 1, wave 2 pivot back here. Alright, so if I just show you the count, this would be the 1, this would be the 2. This becomes the 3, this becomes the 4. All we have to do is put on our bearish case count here. You can see 1, 2, 3, 4. Alright, so we've got another piece of confluence again. So 61.8% hit on the long-term pitchfork. And let's just do a summary of all this. Def cross, regression channel, trend-based fib extension 1-to-1, parallel channel. Okay, now we've got another one. From this pivot, which we often use as our 3 for our flat pattern, and A, B, C with 5 waves, we come to another fib target of 123.6, just front running it slightly. But as we front run the 123.6, there's one other piece of confluence that we front run, which is the pitchfork that crosses the 123.6 here, which is the median line, which you can see here has been in play. And if we just use the more complex version of it for a moment, and bring up this, you can see that these levels, here's the 61.8% golden ratio working as support, and the 50, here's the 61 and the 50, here's the 38.2. Okay, here's the 38.2 being back tested. So this thing's been in play the whole time as well. So there you go, guys. I just wanted to point all that out. Now, here's the sad thing. All of that was in place to give this the best possible chance of forming a low, and it has. But that doesn't mean it's the bottom. That's the one thing I can't give you. If I'd seen a 5-wave move on a smaller time frame out of here clear as day, I'd be screaming buy. Yeah, well, not quite yet. I'd be waiting for a 3 move back and then my usual standard trade setup. But either way, you get the point, right? Now we're not done, believe it or not. What did we do? We did a round trip between the top overbought conditions and extremely oversold conditions. Oversold conditions that we haven't seen, even with this low here, which is slightly higher, we haven't seen since March 2020. Okay, we also got a buy signal and bullish divergence between lows here on the MACD and the buy signal here as well. Right, now this round trip, it's not the most reliable, but it does tend to play out. So let's take the high here. We get divergence the whole time. We eventually come down into oversold. We get one more low. Now in this case we had divergence here between all these highs. We get an oversold condition, and that was the low. Here's an overbought condition. Here's divergence between these highs. Here's the collapsing price down to extremely oversold conditions, and we get a bounce. And all of it combined with all of the confluence I've just pointed out in that one zone. Okay, so I know I'm labouring it, and I know that you're probably going to run away with the idea, oh, that's got to be the low. Now, believe me, when I saw it, I was pretty convinced as well. But I'm not going to call it. I can't call it, unfortunately, because the price action at the moment doesn't support it. So that's what we need to focus on next. We need to look at all of these counts, how they fit in with the larger, technical pattern that we've just seen here play out and all of this confluence, and how it all comes together. So that's what we're going to spend the next part of the video doing. So now let's bring up our various counts. So the first one, assuming we've bottomed, right? This was the one that I have to admit, the whole time I've disliked how this counts. And I went 1, 2, 3, 4, 5. This subdivides nicely. This is okay. This is horseshit. And that's just the problem. It doesn't look like a complete 5 waves. Right. But, like I said, all of those confluent factors aligning here for a running flat, we could be on our way. Right. So that's the bearish case that we've been following for a long time, the idea of a running flat. Now we've got the idea that we first discussed back in September, believe it or not, and have had it on the cards the whole time, which is just simply an expanded flat. Which is the idea that it's going to go back, that it's going to go lower. This could be the 3 here, and that's why we're getting so many confluent factors, because it is a significant pivot. Right? It's just not the completion. So there's a low forming here for a reason. It's either 3 into 4, and we're going to come down into 5, and we're going to go lower, and we're going to hit somewhere around that 20k-ish, 21k-ish target, around the 1618 extension of our A equals C from B. Right, and this is still in play. And if these lows break, here, the recent lows with all this confluence, then the bottoms, the previous lows are our next major level of support. So if I just take this off now and I just show our support, major support. So this is where the buy side support is, right here. Right here. If we break these lows, we lose those buy side algorithms. We lose those buy side bots, we lose that buy side AI. It simply stops participating in the market. So if you break this, you are definitely going lower. Okay. Now the thing is, another algorithm or traders or whatever, and a combination of which will come in somewhere else to find support. The likely target is that fib ratio for the expanding flat, which we just looked at, or perhaps maybe the 20k previous high, which will be the next major structural support in the market. You'll pick up buy side support from there. You could get it earlier, but it would probably have to come off the back of people shorting the lows. of people getting very bearish very late in the day and providing massive amounts of liquidity by going short into the dip, into the low. And that could find support earlier from the buy side, could step in, take advantage of that situation, and potentially even squeeze the short side at that point. That's all theoretical, can't prove it till it happens, and we've still got these lows ahead of us anyway. But if you break this, it's bad news. Now, it doesn't mean that this isn't ABC, but it means that the lower targets are definitely in play, and structural support doesn't return until that 20k previous high. Could find it earlier because of algo set to trade off of fib extensions, but either way, the next structural support would be the previous all-time high. Weird how when we broke through it, went up to here, I said all those months ago, you can go and find the video on YouTube, the day will come when we will likely come back to test a high. Now, even I stopped believing that by the time we were up at 69k, but I said it because it's very common throughout the history of any asset. The issue human beings tend to have is understanding time frame. Stuff takes longer than we think it's going to take. It's just the way we are. We're impatient as a species. We want everything now, and we want everything to be resolved now, but it takes weeks, months, years or decades. And in the markets, I've seen stocks which have been in correction for 20 years and everyone's given up on them and they're dead to the public, but they're only in a wave 2, and the wave 3 will come and blow everyone's socks off. And that's going to happen across the board in multiple places. It's just not going to happen today, or maybe next week, or maybe next month, or maybe next year, but it's coming, and it's always coming. That's the point. It's always going to happen. You know, it's just the public just are so short-sighted and impatient and fickle that they simply can't appreciate how long shit takes. And I include myself. I get impatient. All right, I'm not saying I'm better than anybody else or anything like that. I get bloody impatient at times as well. I'm just simply observing human behaviour. All right then, and that's what Elliott wave is: observation of human behaviour. And algorithms and AIs are built by humans and programmed to think like humans, but just do shit incredibly quickly and at far greater capacity. So the markets continue to mimic human psychology. Support still tends to be extremely technical, which makes technical analysis worth doing, in my opinion. Anyway, enough ranting and raving, let's get back to it. So we've covered the simple expanding flat, which is if the buy side support breaks, we are coming lower to find lower support, somewhere around the 161.8 extension or maybe the previous all-time high. That's the simple expanded flat idea. We've done the idea that we've bottomed, but we need to come in and look at this smaller action on the smaller time frame, which is not particularly convincing, as I've already mentioned. The next thing is the triangle. Alright, now what I like about this is one of the pieces of Confluence we got, right? Let's just take it off for a moment. Let's put on the two pieces that I feel fit the geometry of a triangle best. A rising lower trend line and a downward slope of a major pivot for a pitchfork. If we combine these two elements and put a triangle in its place, we see that this line of the parallel channel and this line of the pitchfork give us our triangle. See? We also get a 50% retracement or 61.8% target for the D. So we could come up here to the 61.8, or we could come up a little slower to the 50, and it would still hit this downward sloping trend line, come back to the upward sloping trend line, and off we go. Now this one fits all the confluence we mentioned, right? It fits all of this. That we've gone bum bum into a big confluent low, and then off we go, and then off we go, and there'll be a whole bunch of stuff waiting here for us, and there'll be a whole bunch of stuff waiting here for us, if it's a triangle. If it's a triangle. Okay, so that's the next one. After that, the counts I tend to downgrade in probability significantly. These are the ones I'm going to give the highest rating. We've either bottomed, in which case we need to import out of here ASAP. We've got lower to go. I think this is generally the most popular all round. And I mean, I see no issue with it. I think it's a high. My caveat would be, if this low breaks, I'm behind you on this count, and if these lows break, I'm 100% behind you, but we're going lower. Okay, but ifs all over the place as usual. Then the triangle is my favourite after that, because of the confluent factors lining up with other technical factors and the way the triangle's formed. The reason this isn't highest on my list is I can't get a clean ABC in here. If it works better as a WXY, and having a complex wave in the A wave of a triangle, I don't think I've ever seen it. It should occur for Elliott wave rules in the C, the D, or the E. More likely the D or the E. So to have it back here in the A is very confusing. I've labelled it ABC for the ease of labelling a triangle, but it doesn't count that way. So that's my issue with that. Finally, the bullish count, which is kind of pointless because it basically bottoms at the same place as the running flat, which is that all of this was a 1, 2, 3, 4, 5, and all of this is an ABC. And we're going to go. Now, this one, the reason this is so downgraded is any move out of here is going to look like it could be the triangle. Any move out of here is going to look like it could be the completion of the running flat. So it's not going to look any different, and it's such a deep retracement that the odds are that it's not the case. Okay, so now we've spoken about all of those, let's now come in and have a look at this low and see what sense. Oh, there's one more, sorry, excuse me. The WXY. I would give this a higher probability than the bullish count, the one I just mentioned about this being a 1, 2. So this would probably be up there. I'm going to drag it and I'm going to put it up alongside the below the simple expanded flat, purely because I prefer an expansive B wave to an expansive X wave. Right, as an Elliott wave practitioner, I'd rather see B as an expansive rather than X. So in that sense, I'll put it behind this count in probability. This one's more likely than this one, the WXY. But a 1-to-1 ratio of A equaling C from B would break these previous lows. And then we're just kind of stopping in the middle of nowhere, according to this, which doesn't seem particularly probable to me. Another reason why I don't rate it as strongly, because the ABC relationship here just doesn't seem to fit. If we were to go that low, I would expect us to go even lower. But we did come in at another golden ratio. Found support here, which is the first target for a shortened C. So A, B, C, shortened C, bottoming somewhere around the golden ratio here, bodying above it with a couple of large wicks below it, so it's not perfect by any means, but that operated as support along with all of this. You see, so there's always stuff in play, you just don't know where it always all is. Okay, so there are all the counts. So let's come down now and have a look at the shorter term price action all the way down here. And we're going to come right down to the 5 minute here. So here's a bit stamp wick. We have to ignore this. Now there are wicks, as a rule we don't ignore wicks in Elliott wave, but if it occurs on no other exchange or the minority of exchanges, we can ignore it and pull it down to an issue with the exchange, and that's the case here with Bitstamp. People say, Tom, why are you still using Bitstamp? And to be absolutely honest with you, I chose this chart at the time when I started charting Bitcoin because it had the greatest history of price data overall over the other spot price exchanges. So I chose this one for that reason, but I will be the first to admit that there's volatility spikes where there shouldn't be, and the reading of volume is not very good. So maybe I should just take the time to recount everything onto another chart, but I can't be bothered to be absolutely honest with you. I will get round to it one day. I wish TradingView had a feature where I could just go Control C, everything on this chart, Control V, prop it onto that chart. That would be bliss. And then I could do it in a heartbeat. But there's a lot of work on this chart. You see? So ignoring this, since it doesn't occur now or anywhere else, let's get into how we come off the low. So when I saw all that Confluent support here, and then I saw an impulse, my wonky drawing here, I saw an obvious impulse off of the low. Like 5 waves all day. Bum, 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 bum. 5 waves. Definitely not a zigzag. Definitely impulsive. That got my heart going a bit. And I was like, so much Confluent data down here and an impulse. Just felt right. And then this happened. And then this. And this. And now I've lost all my confidence that it was an impulsive move. And that's, unfortunately, that's how things happen. They look like they're going to be a rocket ship, and then they turn into sideways drudgery, and it becomes complicated. And it's complicated for a reason. Whether we're a temporary low, then it's complicated because traders are fighting for it to be more than that or less than that. If it's the bottom, there isn't the confidence to just moon from here, and the bears are still very much in control. So it often becomes a convoluted mess, whether you're bottoming or whether you're at a low. If you hit enough buy-side support, you tend to rocket out of the place. We saw it back in March 2020. But it doesn't always happen. You go back to the lows of December 18, January 19, and watch the drudgery unfold while we build a bottom. So you just don't know. But let's have a look at how I've interpreted these different ways of looking at this. And there's lots here, so you're just going to have to bear with me while I dig through them. Alright. Okay, so here's the most bullish interpretation I can determine from here. And it's all of these are a stretch, purely because the structure is a mess. So we get the 1, 2, 3, 4 rather than 1, 2, 3, 4, 5 into a 1. This is a 2. This never turned into a 3, 4, 5, so we can't count it any other way. So we go 1, 2, 3, 4, ending diagonal in the 5th. You know, wave 1 here, wave 3 here, wave 4, wave 2 into a 1. Okay, so 5 waves into a 1. From there, I said we have a 5 wave move down into an A, B, C into a B. This is a flat. And then we went 5 waves in a C. This gave us a 2. Then we had another impulse, 1, 2, 3, 4, 5 into a 1. Expanding flat into a 2. Then we've got a 1 and a 2 of a smaller degree. Then we had another impulse. And this was a 1 and a 2 of a smaller degree. Then we had another impulse. This is a 1 and this is going to be a 2 of a smaller degree. And finally, we're going to go into, so we've gone 1, 2, 1, 2, 1, 2, 1, 2, 3, 4, 3, 4, 3, 4, 3, 4, 5, 1. Okay, of 5. If you'll know what I'm talking about. If you know what I'm talking about. If that's like a load of noise to you, then fair enough. I know what I mean. But it's got to get its arse into gear, and it's got to do it quick. It's got to sort its life out and get moving. Now, because of the sheer, ambiguousness of it at the moment, I don't have much confidence in that being the case. I'm not at all convinced. It's a shame, but that's just the way it is. There's a lot of confluence support down here, but this is not counting in the bullish manner we would like it to. I'm having to force fit this, it feels like to me, if I'm being honest. I would like to have seen 1, 2, 3, 4, 5, 1. A, B, C, 2, 3, 4, 5. And we're getting actual impulse out of here, and we haven't got it. Alright, we've got this mess instead. So that's the bullish way of looking at it. The next bullish count. Okay. So this is a temporary high here, and we're going to break down again to find a lower low in the 2. This also has to get moving, essentially. So same count up to here. This now, instead of becoming A, B, C into the 2 here, it now goes A, B, C flat, W, X, A, B, C, zigzag, Y, B, and now sooner or later we're going to get 5 waves down into a C of a 2, and then we're going to go up and start the 3. Great. Another convoluted mess. And then there's the bearish interpretation, and we've got 2 of those as well. Bearish low. Right. So this wasn't 5 with a very small 1, very large 3, and a very long 5. It was just A, B, C. A was an impulse, and C was a diag. Immediately, that feels more probable. Okay, because the odds of a zigzag being formed by an impulse and a diag and having a good relationship to one another is way more likely than a really fucked up looking impulse. That's just a fact. So this is higher probability already, the bearish case down here is. And that's why on a smaller time frame, when we did the live stream yesterday, I said to everybody, I said, right, here's the long-term counts. How do you feel? And it was basically a 50-50 split amongst those in the chat between bullish and bearish ideas, or at least reversal and lower lows ideas, right? So triangle included. In fact, I think if you include the triangle reversing and the bullish count, probably just pipped it. But when we came down here to the lower time frame, 80% bearish, because some of the guys are good Elliottians who've been working at it for a long time. Other guys are newer, and of course, if you're on the Discord, you're on the Patreon, you're learning all the time. So they're becoming budding Elliottians or already competent Elliottians, and when they see something structured like this on the low, they're like, that doesn't look impulsive, that looks bearish, that looks corrective, and I'm inclined on this time frame to agree. Doesn't mean it's right, it's just probabilities. That's all we can talk about. We have to rate things higher or lower than each other in terms of outcomes. So there's one bearish though, which is this is going to break down. Okay, now the bullish one I mentioned a moment ago, I guess you could argue that this isn't one. I always click on that when I mean to click on the drawing tool. This isn't 1 2 1 2. It could be a smaller wave 1 2 3 4. This is a triangle forming, or a complex sideways combination. Kind of irrelevant because you still got to break higher, right? In both of those bullish cases. In the first bullish case, second bullish case has to come down to complete A, B, C with a WXY for the B into a 2, then we move higher. Right? So that's the first bearish case. Next bearish case is that's the bullish one, Tom. Where have I put it? Bearish case, bearish low 2. I didn't just delete it, did I? Oh no, there it is. So the bearish low, we get rid of that brush stroke. I've just called it bearish low, that's it. Turn that off. And it's gone again. My eyes at the moment, I tell you. Bearish low 2, there it is. So this is the idea that it's just the whole thing's a combination. Most likely a double zigzag. So zigzag here, as we said, impulse into diagonal, and then we've got a zigzag here for our X wave with a shortened C. C still goes beyond the A, still 5 waves, but it's shorter. Then we've got a 5 wave impulse, a 3 wave flat, and then what's probably going to be another 5 wave impulse, right? And this will complete the C, and this will complete the Y, and this will complete a 4 on a larger time frame, and we will come down in a 5 to lower lows. First place we'll be testing after that will be the previous lows, where the buy side support is, and it's got to hold, and you got to put in the end finish of the flat there, or we are going into the expanded flat pattern and we are going lower, significantly so. Seeing from this price currently, which is what, 37,000, you could see 17,000 fall out of the market in the search for structural support lower. Scary, but a hell of an opportunity. If it comes, how many people will be willing to take it in amongst all of the fear, uncertainty and doubt, FUD, and amongst all of the screams of Bitcoin's dead? We'll have to wait and see. But in the meantime, the short-term countdown here looks corrective. Right. Does not look bullish. There is a bullish count. So here's... I hope I haven't wasted your time is what I'm about to say really, because I've given you everything I can observe. I've given you everything that I have noticed. I've given you everything that I think is important, but I am myself completely unsure at this juncture. I was so sure when we got that first impulse off of the low, but now it's degraded in certainty, and that's just life. Unfortunately, I need to see something more convincing. So here's what I want to see on the larger time frame. Okay, because that's the only way I'm going to be able to operate now. I need to see something bigger. Okay, I need to see something that's going to convince me over the larger time frame. So let's just come back to this regression channel. We know we've got all this Confluent support down here, but we just want to focus on the longer time frame. So let's look at levels we need to break on the way back up if we're going to start being bullish. We have a low here. Now, depending on how you count this, you have to take this low into account regarding the impulse from this, that magnet being on all the time, from this pivot here. So we've got 1, 2, 3, 4, 5 into an A, right? B, C, that's the WXY, or we've gone 1, 2, 3, 4, 5, okay? Which means either way we're coming from here. So we've gone 1, 2, 3, 4, 5 complete, whoop-de-doo, C, off we go. Or you could argue that we've gone 1, 2, 3, 4, 5, 1. Now in that case we can meander back above this level and it's not a problem because we're coming into a 2. I don't tend to subscribe to this because the 3 is going to be so big that it's going to smash the count completely, break all possibility of it being a flat. So I don't subscribe to that. I would be willing to some degree to subscribe to the idea that we were already in the 3 and that this was 1 and that this was 2 and then this is now subdividing as 3, in which case it's not complete. Right? You could argue that maybe it's 1, 2, 3, 4, 5 and it's a short 3, which means the 5's got to be even shorter, right? So at that point we've got a secondary invalidation level just to put on the chart, so just bear with me. I know this might be getting a bit confusing, and that's this pivot low here. So whether it's incomplete in the short term, this is the local invalidation point where we can gain some confidence above. If we come above that, happens to coincide nicely with the edge of the channel as well. Okay. Now this here, however, this broken is going to convince me that only one of two things is happening. Either we are complete and we are impulsing out of here, or we're going into the triangle. Either way, getting above this pivot, which is all this prior, I've shown you it. Let's get it. Okay, all that prior support. We've got base support here as well, so let me just bring that up because I know I put that somewhere. Delete these two brush strokes. These are our two horizontals for invalidation. Now where have I put that? Base support resistance, that's it. So you see here, ain't it weird, right? Let's just remove our two horizontal rays. Oh look, base support and resistance. High and a high. Resistance. Okay, resistance, resistance, resistance. Support, 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 resistance. Ain't it weird that the two invalidation points which would help confirm the bullish count that we've just put on, which is this pivot and this pivot, happen to basically completely coincide with long-term base support and resistance. It's not a coincidence, it's a technical factor, it's always in play. So, a move out of the regression channel, right, breaking this long-term support and resistance, breaking this downward trend, I'm confident that we're going higher if that happens. That's all I can work with on the short time frame, on the longer term time frame at the moment, guys. Picking through the noise at the low, very difficult at the moment. I wish it wasn't so convoluted, but it is. So the probability of breaking lower on the shorter time frame looks more likely. However, here on the longer time frame, there's so much sodding support here, I find myself in conflict between the two. That's just how things go sometimes. So for me, get out of here in 5. Okay, breaking this, then there's two things in play, and only two. This is 1. In the completion was here. This will become 2, and we are off, flying up in the 3rd of the 5th. Okay, that's the first scenario. The next one is this. We get 5 out of here. That breaks this level here, and these levels here, and this becomes A. Then we get a B. Then we get a C into a D, and it's the triangle, and we're going to do that. But that is what we've got to be watching for. So let's sum up the video before we go. We've looked at all this confluence, and it's pretty convincing, but it doesn't add up with what we're seeing at the lows. So there's a conflict. So if we keep it super simple, break the trend, break these levels, break this downward trend, we can call A or 1. Right, that would be my most likely, what I would consider most probable. There might be alternatives, but for the meantime we're trying to keep it simple. Break these levels, break this downward trend, bullish. Could be into a triangle before lowering and blah 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 and all that sideways nonsense, but at least it's getting us out of this move. On the flip side, break these lows and it's trouble, because this is our last buy side support right here. If we break these, we lose it. Now it might come back quick, but it might not. So next major support, if we do break this pivot and head lower, is all this. That's the next major support. Okay, I'd expect to see something happen down here. Okay, but if it doesn't, we are going to seek out lower pricing. So there you go. Break the trend higher. Been saying it for weeks now. I've just realised, haven't I? Like, I want to see an impulse out of here, and we're golden. We're looking good. Break this. Bad news. And that is where I'm going to have to leave it, guys. I hope you've enjoyed this video. I've tried to cover everything I can. Wish I could give you more. We've already mentioned the RSI and the MACD, so I don't think we need to go over that. And we mentioned the death cross we got, which is often synonymous with signing off on a local low. So it's going to be an interesting couple of weeks, and we'll see where we are next weekend when we come back and look at it. Alright guys, we'll call it there. Thank you very much for joining me on this technical analysis of Bitcoin. I hope you've enjoyed it. If you're new to the channel and you've liked what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave us a comment in the comment section below, and if you're not following me on Twitter yet, please do so, as I will always put a notification up on Twitter every time I post a new video. Alright guys, take care of yourselves, all the best. Oh, and thank you to all my Patreon subscribers as well. Be back with you guys soon. Bye bye.